Welcome! If you're new to Canada, I know that filing your taxes for the first time can feel, well, pretty overwhelming. But don't worry. In this explainer, we're going to break it all down into a simple, logical flow. My goal is to give you real clarity and the confidence to get it done right. Okay, let's just dive right in with a question that we hear all the time. It's on the mind of almost every newcomer who has family living outside of Canada. And honestly, it causes a lot of stress. So let's clear it up right now. And that is such a great question. It totally makes sense to worry about this, right? You're just trying to do the right thing without accidentally creating a massive headache for your family back home. Well, let me put your mind at ease. The short answer is no. But the reason why is really important to understand. So here's the thing. The Canadian government isn't asking for your spouse's income to tax them. Not at all. They just want a complete picture of your household's finances. Why? Well, it's so they can figure out what benefits you might be eligible for, like the GST/HST credit. In fact, and this is the part a lot of people miss, if your spouse has a low income, reporting it could actually qualify you for a spousal tax credit, which lowers your own tax bill. So reporting it isn't a trap. It's actually the key to making sure you get all the support you're entitled to. Okay, so with that huge myth busted, let's build the foundation for everything else. You know, the entire Canadian tax system, when you boil it down, is really just a logical journey between three key income numbers. Once you get how these three steps work together, the whole thing just clicks and makes a lot more sense. I want you to think of it like a funnel. At the very top, the widest part, we pour in everything, all of your income from everywhere. That's your total income. Then the funnel starts to get narrower as we subtract a few specific things called deductions. That gives us our net income. And finally, it narrows one last time with another set of deductions, and what comes out at the very bottom is the most important number, your taxable income. This simple three-step journey, this funnel, it's the absolute backbone of your entire tax return. All right, let's start at the very top, the widest part of our funnel, your total income. You'll see this on line 15,000 of the tax forms, and it really is the starting block for everything that follows. Now, the crucial word here is all. This includes everything. Your salary from your Canadian job, any freelance work you do, rental income from a property back home, gains from investments, it all gets added into this one big pot at the beginning. It's really important to get this. Just because you're reporting income here doesn't automatically mean you're going to pay tax on all of it. We're just setting our starting point. And this is where it gets interesting, because not all income gets poured into the funnel in the same way. For a regular job salary, you just report the gross amount from your T4 slip. Simple. But for self-employment or rental income, you get to subtract all your expenses first, and you only report the net profit. And then there's capital gains, like if you sold some stocks and made a profit. This one's really unique. You only have to include half, just 50% of that profit in your total income. Okay, so we've got our big starting number, our total income. Now it's time to see how that funnel starts to narrow. This is where deductions come into play. Think of them as specific expenses that the government lets you subtract to lower the amount of income you'll actually be taxed on. This first set of deductions takes you from total income down to net income. These are generally things that the government recognizes you might have spent to earn a living, like childcare or union dues, or things they want to encourage, like saving for retirement in an RRSP. You subtract these and boom, you've got your net income on line 23600. But wait, we're not quite at the bottom yet. There's a second, usually more specialized, set of deductions that takes you from net income to your final taxable income. Now, these might not apply to everyone. They're for specific situations, like if you live in a prescribed northern zone or if you have certain stock options. This is the last step that narrows our funnel. And here we are, line 26,000, taxable income. This is the big one. It's the final, bottom line number that the government actually applies the tax rates to. That whole journey through the funnel was all about getting to this specific number as accurately as we possibly can. So at this point, you might be thinking, okay, that's a lot of steps. Why not just have one income number and one set of deductions? Why make it so complicated? Well, the reason these three different income figures exist is absolutely critical for your life in Canada. And believe me, it goes way beyond just calculating how much tax you owe. Remember this line number? This is your total income. The one from way back at the top, the widest part of the funnel. It turns out that this number, not your final taxable income, is often the one that matters most for some of your biggest life goals. This is the perfect example. Let's say you want to sponsor your parents so they can come and live with you in Canada. Well, the immigration department doesn't look at your income after all the deductions. No, they look right back at the top of the funnel at your total income on line 1500 to see if you're financially able to support them. This is just one reason why getting that very first number right is so incredibly important. So you see, this isn't just about boring paperwork or following the rules. Your tax return, it tells your financial story in Canada. And understanding this process from start to finish is really about taking control of that story. It's about empowering yourself to build the future that you want to have here. So the big takeaway here is this. The Canadian tax system isn't just a bunch of random rules. It actually follows a very logical path. By understanding that journey from total income to net income down to taxable income, you're not just filling out a form. You're actually mapping out your financial life with strategy. You are taking control.